All right, and we are live. Bradford is out today, so Farzad agreed to step in. We got a lot to cover: V14, some energy stuff. Markets had a little tiny puke for the end of the day. I don't know if you saw that. A little tiny kind of like Trump tariff soybean
Little
puke.
puke.
Maybe we'll
Little
we'll
puke.
just like a little, I don't know,
Ooh.
regurgitation.
Yeah.
Nothing too serious. So we'll talk about that and everything
Yeah.
else going on in the markets. Farzad, thanks for stepping in. And for those who might be wondering, why are we on the Farzad stream as well?
Yeah, for sure. No, thank you very much. I've partnered with Rebellionaire to bring the Rebellionaire podcast, the weekly podcast that already airs on Rebellionaire's YouTube channel, to also come to the Farzad YouTube channel as well. I've loved watching Matt and Bradford doing their content. You know, not only do they have their own company, but like the thing for me really that I really enjoy is that these are guys that are almost like analysts first, and they understand these spaces really well, and they create really good content about stuff that I'm naturally interested in. And I thought that it would be a very good idea to bring their content also to my audience, so y'all could benefit from their content as well. And then also y'all can obviously visit all of the things that they offer on their website and all that stuff. But like the primary reason here is that I just really enjoy their content. And one of my goals for my channel long term is to bring content that I also find interesting to y'all as well by partnering with people like Rebellionaire. So I really thank you guys, and it's an honor for you guys to honestly agree to this and bring this forward to my grouping, to my audience, and you know, all the people that watch my stuff. And then moving forward, unless I'm needed or if they're asking me to step in or whatever, Bradford and Matt will continue their regular show on Rebellionaire, but it will also be viewed on my channel as well. So I'm super excited. Thank you all very much.
And perfectly right on cue. My camera somehow lost connection. I don't know what is going on. I don't think this has ever happened before.
The unprofessional return of the Farzad podcast, the way we do it. The reason why I partnered with you guys was to bring some professionalism, Matt. And you guys come here and you totally just go back to the norm of this channel, which is just like bleh, whatever. So thank you for not up-leveling the conversation like I had hoped.
Yeah, this is I honestly don't think we've ever had this happen before. This is beautiful.
Was this the prank from the very beginning? It was like, yeah, we'll agree to be on your you were there. Hey, there, he's back.
I got the other camera. This is hilarious. I might need a wow, this is awesome.
This is the greatest launch of a partnership I've ever seen. This is destined for greatness.
We do this week in and week out. I don't think I've ever had this happen before. So yeah.
Oh man.
So wait, just to get this straight though, you said your goal is to increase the professionalism of our stream. And on this stream, this is when we have this terrible botch.
Yep. So thank you very much you return to the norm. You return to the mean of what I usually offer. So thank you. I really appreciate it. You look more tan now, by the way. The new camera gives you a little bit more life. You're good. Great.
This is so good. You know what's funny about this is here we go. I think I got it now.
Oh, there we go. We're back.
Yeah, so that normal cam, that's what I have for my day-to-day, just like conversations and like Zoom calls and that sort of thing. It like turns me orange. I've got like Donald Trump skin. I don't know why that happens, but then like I've got this nice one, but then it blocks half my screen. So I only do this when we're live streaming. Anyways, that was ridiculous. My apologies.
No, honestly, that was literally the best way to start this podcast. I'm not even kidding. Thank you very much for planning that.
One of the little behind the scenes things, Farzad's like, okay, maybe I can help you with like how to be a little more professional, get some more views. I'm like, no, we don't need that, Farzad. We've got this all buttoned up.
Off to a great start.
So yeah,
let's get into it. Yeah.
So, but before we were just going off the rails in literally the first 2 minutes, you and I were talking off screen about everything going on in the Tesla world. A lot of stuff we'll get to in a minute, but you said something that really resonates with me, which is you can't stop thinking about V14.
Yeah.
They had an update within 5 days to get to the, I don't know what they're calling it, 14.1.1 or something like that.
Yeah.
So what's going on? Why are you so obsessed with 14? And I think I know the answer, but I'd love to just hear in your own words how you think about it.
How long have we been waiting for a moment like this?
Probably since V13 came out, I would think, because that was the last real step change.
Yeah,
I think. And to me, that was like an oh my gosh, like this is instantaneous. Like the first 30 seconds I was driving, and I was like, okay, this is a different thing. Immediately, like way more human, way more natural. And like a very big deal. So I think it's basically since then.
I mean, for me, it's like this is a You know, and just to be very clear and transparent, I haven't had a chance to ride in a V14 vehicle yet, but I had Sawyer Merritt, Chris from Dirty Tesla, Chuck Cook. I had JD from AI Driver on my channel for an hour and a half talking about their experiences. I've watched all their content. I watched all their commentary. I've watched content from other creators that have V14. I've talked to many of them. And the conclusion that I'm hearing around the groupings, without me putting words in anyone's mouth, but I think it's inescapable, is that it feels like Tesla is at a point to start turning on unsupervised self-driving. And that has been the lever that we've been waiting for, not just like, say, Tesla investors or Tesla fans, but I think the broader public has been waiting for this, like, oh, it's not really FSD. It's not really self-driving. I still have to pay attention. You know, if I want to have to pay attention, why should I do the halvesy thing? And I think that's why the current offering of FSD supervised hasn't caught on the way a lot of us nerds have expected. It's because the general public, they're the normal people, like people that are actually normal and aren't crazy like we are like, well, if I still have to pay attention, why should I get it? It doesn't make any sense. I'm driving anyway, right? The regular person is going to look for the actual utility, the value that they would get from the self-driving thing, which is like, I don't have to pay attention. They're not nearly as impressed, and not that there's anything wrong. I'm not saying this is not an indictment on their inability to see maybe the technical prowess of the software, but this is more a commentary of just how regular people behave. If you can't solve a problem for them, then they're going to be like, I don't know if I should spend money on it. But once you're like, okay, you no longer have to pay attention. You can be on your phone or whatever you want to do while the car takes you from point A to point B. That opens up a brand new floodgate that no other automaker can do. And the reason why they can't do it, it's because the generalized approach that Tesla has taken to solve for self-driving using artificial intelligence in the physical world requires millions of cars on the road collecting billions of miles per year, powered through a multi-billion-dollar compute cluster, and then passed down to the most compute-efficient inference chips in the world, spread across millions of cars that cost $35,000 or less to build. How on earth does another company try to compete with that? And so that puts you in a quasi-monopolistic situation long term, as long as they execute on the technology and the regulation allows for this to happen, right? So and so all of this is a culmination of that. And now we're seeing the videos of the car going through drive-throughs and stopping where it's supposed to be stopping and going when it's supposed to be going. We're seeing ridiculous behavior in parking lots. All the stuff we were worried about like a year ago is like, it's a non-issue anymore. People don't really talk about it. So that's a lot of words I just said, but it's hard not to be excited.
Yeah. Well, the thing you said that really stuck out and resonated with me was like, if you're not solving a problem for people, they really don't care. And I think that's so true. Cause like so many of my friends who I've like shared this to, or like family members, you know, I show them, like give them a drive, and it's like 95% of the drive is great, but then it like breaks a little too hard or is like slightly too awkward. And they're like, oh yeah, I don't know that I would use it because I don't really mind driving. And I think my audio just went out. This is hilarious. Oh no, there we go. No, I'm good.
Yeah, you're good.
This is ridiculous. So I think like for the normal people, like, you know, if you're just driving the way that they normally would, except that they can have their hands in their lap, but they still have to pay attention. They can't look at their phone. You actually aren't really solving a problem for them, because it's just like, you know, maybe a slightly more stress-free drive, but for most people, like that doesn't really move the needle for them. I think us Tesla nerds, like you were pointing out, like we get so excited because we can see where this is going. You know, I think we're always looking around the corner. Which is why we get so excited about these little incremental improvements, because it validates the path where you can be on your phone, you can be watching Netflix in the car, you can take a nap. And I think what's so exciting about V14 is it seems like we're really close. Like in all these previous versions, there was still a lot of correcting that still needed to be done, you know, like somewhat substantial issues that needed to be fixed. And now like it seems like it's at least possible that they could pull drivers out and have you actually not paying attention like within months, which is new territory.
I agree. And I think, you know, like the one measuring stick that Elon has brought up before is like, okay, you know, we think we're going to be a feature complete by X date, feature complete by Y date. And so like when I hear the sentence feature complete or the phrase feature complete, what that means is like it can do anything that is needed for a self-driving network at scale, or a car that you don't have to pay attention at scale. And V14, again, like we don't have enough miles, we don't have enough long-term testing, but from what we've seen so far, it is a pretty compelling, from my perspective, a very compelling thing that they've built that says, we did it. Here's like you see it. Here's feature complete. It can do parking lots. It can go literally from parking spot to parking spot, truly without you having even to pay pick a parking spot. It does everything. You can select where you want to park. Even you can say parking garage or whatever, right, on the side of the street. So it has a customizable experience. And so like and we saw the videos from Omar's catalog, Omar, where it went into this closed road that there was no signal of that on the maps, and it was blocked by a bunch of emergency vehicles, and the car's like, screw this, I'm gonna go a different way. Okay, that's it. It wasn't somebody in a headquarters saying, no, don't, like, turn around. The car's like, oh, this looks, I should probably try another way.
Okay. Like in one of the other, like Elon talks about it being sentient, and I think that's one of the feelings on V13 and earlier, where it just hasn't felt sentient. One of the ones that really stuck out to me, I think it was Dirty Tesla, was saying, he was routed to go this particular way, but then like one of those like pelotons of like 100 bikers started going, and it was like, oh, that's going to take a long time, and it just rerouted. So like the navigation was still showing go this way, but the car decided to override navigation and go around it. And so like that sort of decision that, okay, we are not rigidly following the rules. We're going to say, I'm going to just make this executive decision quickly to go this other way around. Like that is like, there's so many just like small examples like that where this latest build seems to be making sentient type decisions. And that's super exciting.
And there's another thing too that was discussed on my podcast from last week when I had the roundtable with Chris, Chuck, and JD and Sawyer. The one of the biggest things that's coming across is not just the different things that it can react to, but just how quickly it reacts to them. So what we know from this V14 update is that it's a 10x of parameters, right? So for the layman, what that means is that basically it's processing 10 times more variables than it initially was to try and make a decision. So, like a simple example, it's like, okay, I'm paying attention to the old ways. I'm paying attention to the traffic light and the pedestrians around me and like the road and the curb and maybe a couple other things. What 10x the parameters allows you to do, and it allows you to say like, okay, but now I'm paying attention to this potential car, that potential car, this potential car, all at once, basically all at once. And then it can compute all that data and then say, okay, this is the right decision to take. So it has dramatically increased the things it has to look at, but then on top of that, how it reacts to those things has also massively improved, to the point that the feedback that we're getting from these folks is that it's reacting just as fast or faster than I would have. And that's a signal that says that the compute has the potential to reach human level as long as it can make the right decision. Human level of safety. That's the signal to me. So what does human level of safety imply? One accident per 500,000 miles. And to increase that threshold, it just feels like more data and more compute. If they can't, let's say they need to get beyond that to get approved as a robotaxi network long term to account for all those things. So that's another thing to be cognizant of, is like, it's just the improvements of what sentient means is a combination of different technical things that they've solved that manifest themselves in the real world by quick reaction time and doing things that we would typically think of like, oh, that's like how would you even know how to do that? The card, it's just doing it the way you would. It's just you're not aware of how your brain works. But these guys have figured out how to make the brain work.
Yeah. I mean, just another Dirty Tesla example. He had a test where I think he had his wife, I'm not sure, try to like back into the car while V14 was engaged, and the car backed itself up. I mean, that's what you would do as a human, assuming it was safe to do so behind you. So like, it's so many of these like random edge cases, seem to have been solved where, as in, recently one of the issues, even on like the robotaxis in Austin, was like that UPS truck backing into the Model Y, and it was just like staying there. So like, I mean, this is like, we're literally just like months away from robotaxi launch, and we've already got like a very significant increase in these capabilities. So to me, it seems like they've cracked it. Elon was saying earlier this year that, by the end of this year, we'd be able to, basically have unmonitored FSD, like literally like watching our Netflix or phones or something like that. And it would just grab our attention if it needed us to handle a situation. Like I kind of laughed at that at the time. I thought, okay, that's Elon time. He's over promising, maybe in 2026 we'll get that. But I still kind of would think they don't do it in the next, 2.5 months. But to me, it seems like it would probably be safe for them to do so. I think they just don't, out of an abundance of caution and really to get the data, really clear that they are safer than a human. But I don't know. What are your thoughts on when we get to that point?
I agree. I mean, this is something that I've been racking my head. Like the talking head I did yesterday was like, it's not a question of if, it's when. Mm-hmm. It's very obviously become a question of when. I think, I mean, it's obvious to anybody who follows the Tesla story closely that any sort of negative attention that Tesla gets is 100 times that of Waymo or any other company. Mm-hmm. The perfect example of this was when we recorded a video of the Waymo, fantastic technology, but clearly doing some clearly unsafe stuff in front of Terry Blacks. It got basically no media coverage. But then if there's a video that I put together of robotaxi doing something kind of stupid, it gets blown completely out of proportion as the most unsafe thing in the world. And so the team is very cognizant of that dynamic. Yeah. And the thing that could derail their chances of expanding as quickly as possible is drawing regulatory or public disdain that will slow them down. That being said, if they have data internally that says that if the human wasn't paying attention here, we're going to be better off, similar than how, FSD on with a driver is like 7 times safer than the average safety in the United States or something. Mm-hmm. If they have that in the data that says when people don't pay attention in these situations, or when the car has it in these situations, a human being in control is actually worse. You would be an idiot not to push that out, because that's going to impact insurance. That's going to impact all kinds of stuff, right? Yeah.
I think we're in this weird spot right now where, FSD plus human driver gives you like superhuman capabilities. But I think it's going to be pretty clear that like humans intervening at all is very quickly going to lower overall safety. And that's been a relatively recent change. I mean, I remember the first time I was in a situation where like I had to slam on a brakes. It was like an accident kind of coming up. And I was like, you know what? I actually trust FSD to do this more than I can. And it handled it absolutely perfectly. Like in like a really tight, tense situation where, if I did not brake, or the car in this case did not brake aggressively enough, like absolutely would have rear-ended this person because he like cut me off on a highway. It was I won't explain it, but it was just like, I think more and more people are in that type of experience now where they really are trusting that FSD is going to handle these very complex, like millisecond kind of reaction times better than we will as humans.
And think about that, like from Tesla's perspective, their technology is going to be so good that they have a very clear KPI, a key performance indicator, a metric, a number that will tell them when to make this wide, which is make it safer than a human. And if it's safer than a human, make it unsupervised so that we don't introduce the human as the fault. As the failure mode. That is the cleanest possible metric you can have as a company to launch this. And when it gets launched, it essentially guarantees success in a lot of different ways because it capitalizes on the value of that dynamic, which is the person no longer has to pay attention, which means that the person gets their time back, which means that it becomes a valuable thing because time is the most valuable currency we have, which then opens the floodgates for Tesla to play with. Okay, maybe unsupervised is $200 a month, maybe it's $300 a month. It opens all these different dynamics that makes the conversation very interesting.
Yeah, in one of the other interesting angles I've been thinking about a little bit is, they were saying on, I think it was the last earnings call, how they're seeing some people are like disengaging FSD so that they can look at their phones, which is obviously like super dangerous, and that
one more signal do you need than that
very obviously increases the overall risk. And Elon, to his great credit, he says all the time, and he actually acts on this, that he believes in the reality of doing good more than the perception of it. So I think this is one of those cases where, having increased monitoring and like more strict rules and like don't look at your phone for longer, might on paper look better, because then like, oh, if somebody really was looking at their phone and they get into a crash, well, we told them not to, and it was really their fault. I think Elon actually cares about like reducing the total number of risks, regardless of whether it was FSD's fault or whether it was the human driver's fault. And so I think for that reason, he's going to be, more aggressive than like almost any other CEO would be at pushing it out at the prudent time where it's actually, more fully optimizing for reduction in total risks, or total crashes.
I agree 100%. I couldn't agree more. And so the question becomes is like when that's going to happen, when are we going to see it? The talk he gave at All In a couple weeks ago now, I guess, when they had their summit, I mean, I don't know if you remember this quote specifically, but it seemed to me like he said that hardware 4 is going to be capable to be at least 2 to 3 times safer than a human, which means 1 accident every million to 1.5 million miles.
Yep.
That seems like a huge deal. And when you look at V14 and how it performs, it kind of backs it up a little bit. Yep. Because it's like, okay, when does an accident happen under that scenario is when the system fails. When it does or it has such an extraordinary situation that it becomes unavoidable to like the 1 per whatever million miles of an accident is just you're just surrounded by human drivers, and that's what's going to happen.
Yeah, or a deer runs out at you or whatever. Like there's gonna be some of this stuff that I think is unavoidable. But yeah, it's
truck tire in the middle of the road, whatever.
Yeah, I'm just super excited about this. So when do you think we get us peasants get the actual V14 release? Do they need to wait any longer? I mean, it's to me it seems like it's ready to go.
I think I would love to pick your brain on this too. Like from my standpoint, it feels like it's ready by the end of like at the very latest, like next month. I don't know why
for unsupervised. I was saying just like normal V14. But actually, I'm curious in your answer on both. Yeah. Like when do we get 14.1 or 14.2, whatever, when they end up shipping wide?
I think they want to get it out to the fleet first before they turn on unsupervised for sure to collect enough data. Yeah. I think the peasants, so all of us, which are still extremely fortunate to be able to do this, beyond fortunate. We will probably get it no later than next month, end of next month. I would say by Thanksgiving. I think we'll have a broad rollout of 14 supervised. And then I think latest mid next year we'll have unsupervised.
Okay, those are conservative. I'd be disappointed, if we don't get it until Thanksgiving.
Unsupervised?
No, just 14.
Oh, okay.
So I don't know. So I'd say end of this month. I would hope that normal FSD purchaser subscribers would get V14, and I guess I would sort of. I probably agree with you on unsupervised by middle of next year. I might optimistically kind of hope for Q1 at some point, but it wouldn't surprise me at all if it's Q2. I think if it goes much later than that, I'd be a bit disappointed. But I think really from here, it's of course I want FSD unsupervised just because that's going to be a better user experience and everything like that. But as an investor and kind of looking at Tesla as a stock, like, to me that gets to the question of how quickly can you scale robotaxis, because if you're willing to give unsupervised to your normal users wherever they might be in the entire country, but then you can definitely do robotaxis everywhere in the country too. So I think they're going to roll out unsupervised robotaxis with no safety monitor or safety observer, or whatever the heck we're calling them these days, to a lot more cities, get a lot more data that way before they go like real unsupervised to the just normal drivers.
And you mean real unsupervised, meaning like I can go in the backseat and take a nap?
Yeah, you can watch Netflix, whatever. Yep.
I agree 100% with that. I think and this is what's so fascinating about this rollout is that it's like you have different modes of this software that all operate simultaneously, and they're all very like synergistic, right? And I hate using the word synergy, but I feel like Tesla's like the best example of synergy.
Well, I'm an MBA, so I love it. I'm actually legally obligated to use that word once a day.
Excuse number 2 to take you guys off air. You messed up the intro, and now you're an MBA. I find out you're a freaking MBA. No. So they have this flywheel effect of the fleet of people that have the cars improves robotaxi, which is the driverless rideshare network, and that also improves the fleet because of how many different types of interactions you may encounter when you don't have somebody behind the steering wheel and pedal. That's one technical challenge that Tesla also is solving for in Austin specifically, right? Because the cars are now running into issues, quote unquote issues or real issues, where you don't have the person behind the steering wheel and pedal interacting to solve it. You're actually getting additional data to see how does this car actually solve this situation that it wouldn't typically have the chance to solve, because you might have, say, an anxious driver behind the steering wheel that has a different sort of like this spectrum of when they feel comfortable stepping in or not. So you get a lot of different ways of testing the limits of this platform. And one would have to think that you're going to have a lot less tolerance when people are behind the steering wheel and pedal, because if you're behind the steering wheel and pedal, you still have to, you still are responsible for the car. And I think once you're yanked out of that seat and you're put into the passenger seat, the dynamic changes completely. Yeah. Because you're you no longer have if you do something stupid on the road and you're behind the steering wheel and pedal, even if it's unsupervised, you're gonna be like, oh crap, I should have stepped in and not piss off this guy. Whereas if you're in the back seat, you're like, it wasn't me, bro. Look, I'm in the back seat. I don't know why you're getting mad at me. It was the car. You know,
I am so looking forward to people's minds being blown, because for at least a year after this goes out, people are gonna be like, what? Freaked. Where's the driver?
100%.
Oh, I can't wait, because still so many times I'm just sitting there with my arms in my lap or on my chest or something like that. And I'm driving by and people are thanking me for being courteous. And I'm just
you're taking credit. You said, I would have been like, it wasn't me, bro. That's okay. Let me ask you this. What do you think comes first? Austin expansion of robotaxi? Oh, let me ask you 3 questions. Which one do you think comes first? The expansion of the geofence in Austin, the removal of the safety rider in Austin, or Arizona going live?
Ooh, I would say Arizona going live. Because I don't think you need to expand the geofence in Austin. It's already pretty big given the number of vehicles they have there. And I think they'd want some more data, more proof in other geographies before they actually do remove that safety observer. I think it's coming, soon-ish. I would think within the next 3 months or so, safety observers get removed, in whatever cities are operational by then. But yeah, so I think it's, remove the safety drivers, expand the quantity of vehicles in each one of those areas, because then you'll be able to do a lot more vehicles, and then expand the geofence. And then I think I forgot what your third thing was.
It was Arizona.
Arizona, yeah.
So which one do you think is the bigger catalyst? Removal of safety rider or unsupervised FSD in people's cars?
I think removal of well, it's tough, because I think the removal of the monitors is going to come first, and so that's going to be a big signal that it's ready-ish for a lot lot larger scale. But to me, it's the bigger, whenever you and I can just use our own personal vehicles and have it be unsupervised, where we're literally in the back seat. That to me is a very obvious catalyst that it's solved and done, and demand for Tesla vehicles and FSD is through the roof, and robotaxi is scaling immediately with massive earnings implications. So that's going to be the bigger catalyst, but I do think the market is going to kind of move ahead of that, if I had to guess.
How much regulatory has to be changed for you and I to be able to sit in the backseat of our car and let our cars drive us anywhere?
Well, the big one that comes to my mind is you've got to figure out insurance at that point. So if you do get in a crash, I think Tesla has to assume that liability, right?
Oh, they have to.
So there's going to be, which I think also implies is that you have to have Tesla insurance, and they're not operational in all these different states yet. So I think there's some real questions around exactly how that's going to work. So for those types of logistics might, get this a little bit muddied up. And we haven't heard an update on Tesla insurance in a very long time. So I'm sure they're thinking about this and have been making some moves behind the scenes. But at the same time, that's a very important thing that is going to have to be in place before this really can go wide.
I agree. And you know what this makes me think? And I hate bringing this up again.
Synergies.
No, yeah, synergies, Mr. MBA, making me so smart. No, the Cybercab, because Cybercab is tied into this, obviously.
Yep.
They're gonna have to sell it with a steering wheel and pedal.
Mm-hmm.
They're gonna have to. I flip flop on this all the time. I'm such a flip flopper when it comes to this, big time, because one day I'm like, I'm convinced that regulation's going to catch up because you have Duffy in office. Then I'm like, well, but how do we know that for sure? Like why are you waiting on this guy to give you a green light? And then I'm like, well, yeah, but if you really think about it, the first year or so of scaling, if they have like 4 or 5 geofences that are like 30 miles of a radius, you can just overrun those those places with just a massive amount of robotaxi, of Cybercab specifically, and then that's going to give you enough landmass to not have idle capacity. But then I'm like, okay, but then what happens in year 3, year 4, when you're pumping out 2 million cars per year, and Uber's entire active fleet right now is like 1 million active drivers? In theory, you can displace Uber with half a year's build-out capacity. So it's like, okay, but
well, in theory, you can actually do it overnight by going out to the existing fleet, right?
Exactly. So I'm like, okay, where are all these cars going to go? Like, are we really confident that we're going to go like completely driverless in 3? It sounds like if the Cybercab doesn't have a steering wheel and pedal, the signal that sends, if that never changes, the signal that sends is like, hey, we are going, like, this is happening in 3 years. In 3 years, the dominant form of the primary form of transportation in most metropolitan areas in the United States will be driverless Cybercabs. Yeah. That's the signal that sends. And if that's the signal, like, nobody's expecting that. Nobody's expecting that. And so, and then in my head, I'm like, that feels, I don't know.
It also, like, to me, that's the natural progression of the way that this should go. I was listening to the Acquired podcast this weekend, and the guys are in the Bay Area. They were talking about how I think they said that the majority of rides in the Bay Area now are actually done by Waymo, not Uber. And so, like, when they're actually going out, like, they'll check Waymo first, and then if they can't get a Waymo for whatever reason, then they'll go to an Uber. But like they're saying, like, the way that they use it is actually different now. Like, they'll put their car seat into the Waymo, but they would never do that with an Uber. You know, they'll like get some like bigger bits of like cargo and stuff like that. So because you don't feel rude for like inconveniencing somebody to, like, you know, take 2 minutes to install a car seat.
Which podcast was this, Matt?
It's Acquired. Have you heard that one?
No. I'm gonna listen to this after here.
It's phenomenal. So they just give, like, you know, business history kind of stories. So they were doing one on Google and the history of that. So I think it's like third part of that series. It's a phenomenal podcast. They, you know, I think you'd love it.
So let me just say back what you just said. So in the Bay Area, there's now a preference, instead of using Uber, the preference is to use Waymo, even though it comes at a premium. There was a study that came out, and so they cost like 20 to 30% more than Uber, I think, is like the average ride or something. So even though it's more expensive, people are opting to use Waymo because it's a better experience, because it allows you to, you know, not be so like worried about what the driver's going to think, safer because you trust to put your child in the car, private, obviously, because, you know, the car is all to yourself. Oh, how is that not the biggest signal that the player with scale will dominate everything? How is that not the greatest signal of all time?
Well, I think that's exactly what, like, I was actually shocked to kind of hear this, and, like, you know, just how the individual use case is different, because you can have like a business call and like have it on speaker or whatever, or like, you know, not needing to be worried about sharing confidential information, whatever, like all these little benefits that right now they're paying a premium for. So what happens when you get all those same benefits and you're actually undercutting on price?
Yeah,
like
exactly.
So, it's so obvious. Right? Yeah.
Are we going crazy, Matt? Okay.
We're part of a cult, so we do have to admit that.
Damn it, you're right. I was actually Peter Boghossian. I don't know if you're familiar with him, but he's a guy that does content, but he's a professor. I think he used to do philosophy, but he invited me on his podcast. We did an hour and a half. We just took robotaxis all over Austin, and we just talked about all his questions he had about robotaxi and AI and human robots and technology and all that stuff. And the one thing that his producer showed him my videos about like how I think Uber is going to is completely and utterly cooked because of this dynamic we just described. And he kept asking me like, how is Uber not the most obvious short of all time? Not financial investment advice. How is Uber not the most obvious short of all time? I'm like, bro, I'm not going to give you investment or financial advice. Like, I'm not going to tell you to short anything. He's like, yeah, but how is it not the most? And I'm like, bro, I know, I agree, I get it. I'm not going to tell anybody to do that, but it's like that dynamic is so hard to ignore when you realize it and when you see it, and when you mention it to people, like when this is like probably a sign that I'm probably a little bit on the spectrum, because I'm trying to talk to normal people about how Tesla's going to like put Uber aside and it's going to like, dude, you don't understand the technological stuff, and they're like, whatever, like, okay, sure, I believe you. But it's like, don't you understand how fundamentally crazy this is? Like the entire rideshare world in the United States is going to be upside down at the flip of a switch. At one software update, one app is going to get deleted, and then another one's going to be installed because it's cheaper, safer, more convenient, more private, more comfortable, more consistent, and more available. And you don't have drivers canceling on you because your ride might not be beneficial or make sense for them to do. I'm very ranty today, man. I'm sorry.
No, that's all right. It's good. You're passionate about it, and I am too. I mean, it just feels like we're at the cusp of this really big moment. And I mean, we've obviously been in the Tesla community for so many years that, but it was always this like abstract thing that like maybe in a year or two, Tesla's going to figure it out. And it seems like now we're like really just like right at that inflection point where like it's about to go like totally vertical in terms of capability and, Tesla's economics. So I'm super excited about it.
Yeah, same.
So let's maybe get off FSD, even though like this is, I think, by far the most exciting thing going on right now. But we do have earnings next week. What are you looking for in the earnings report, the earnings call? Anything in particular?
Actually, I was very curious to pick your brain on this, because where my initial hunch goes to is the Tesla's back to scale, like they're back to utilizing their lines. Not the Cybertruck one, unfortunately. They're still, and the SNX one are suffering, unfortunately, which I think is probably like the Cybervan's probably coming next quarter, if I were to guess. I could be completely wrong, but we'll see. But that's still going to be like a maximum 100,000 cars per year. Like we're not going to worry about that right now, or maybe more. Who knows? But we'll set that aside. There 347,000 cars they delivered, 360 something they produced, I think. Correct me if I'm wrong, but that gets them back to Q4 24 levels of production and deliveries. Now we've experienced about let's say 6 to 9 months worth of efficiency improvements, cost decreases, and a bunch of other improvements that the company has put in. But then also in Q3 specifically, because of the EV tax credit, Tesla really hasn't had to lower prices. They've had an influx of orders at sort of like leveled off prices while benefiting from cost improvements, especially running the factories at full tilt. So what I expect to see are maybe not the strongest margins ever, far from them, but maybe a return to maybe close to 20% gross margin potentially. I don't know if you agree with that or not. But the other thing I'm looking for is I'm curious to see if there has been any, is going to be any commentary around an uptick in FSD subscriptions. And if those are becoming material. And if we're going to see some sort of signal that says, hey, maybe, I don't think it's going to happen this quarter, but what I'm looking for is like, when are you guys going to break out that autonomy line? I want to see how much revenue and cost you're making from FSD. Like I want to see those margins. I want to see like some sort of signal that says here's what's happening. But then more importantly, I want to get some guidance on how the robotaxi fleet is operating in the Bay Area and in Austin, and if we can get some clues as to what their expected cost per mile is when they remove the safety rider, because the modeling that I've done on my end says that a robotaxi ride with like, let's say a 10-to-1 robotaxi to teleoperator ratio. So for every 10 robotaxis you have one person at any given time making sure that the robotaxi is doing what it's supposed to be doing. You can get to about 50 cents per mile of cost, somewhere between 50 to 60 cents per mile, if I remember my model correctly, which means that if you're charging $1 per mile, you're making 40% margin on per mile, right? I would love to see some clues around that, but I don't know. So those are the things I'm looking for. But let's talk to the guy that actually knows what he's talking about. What are you looking for?
Well, I think you're probably not too far off on the margins. I mean, all those dynamics are kind of what I was thinking through too when I was developing my estimate. I think the FSD revenues are still pretty small. I mean, especially the subscriptions with if you've got paying $100 a month, even if there's 333,000, just to make the math easy, subscribers, then in a given quarter, oh gosh, I tried to make the math easy and then I still screwed it up. It's like I think it's like low hundreds of millions of dollars.
I'm gonna let you drown,
FSD
Matt. I'm not gonna come to your
revenue. I know
rescue.
you're sitting back, you're just enjoying this.
You set the numbers. You
I
set
did.
yourself up for that.
Like I do this all the time, where like I get the math all straight, and then I'm just like, somewhere in there, my brain 5 years
Lock
ago would have
10,
been able
bro.
to
Just
handle
use
this.
tens. Just put the zero at the end. Make it easy for yourself.
Yeah, I do know. Well, I won't be able to get the exact numbers completely right. Like in the modeling that I'm doing, it's been like a couple $100 million, but pretty consistently. And so if you've got some reduction in I think the credit revenue is going to pretty significantly go away now. So you've got that kind of headwind because not all the credits are going to go away, but some of the EV credits are not there anymore. So you've got that as a headwind. You've got I think FSD take rate is increasing, so that's going to help, but I don't think it's going to offset the reduction in credits. And so then kind of putting that together with the greater margin, but my estimate right now is about 56 cents, which is good, but it's not like the stock's going to rally massively on the back of a number like that. So But I've been saying this for a while now, regardless of whether a particular quarter is good or particularly weak. Like with the stock price in the 400s, it doesn't really matter whether we get 70 cents of earnings or 40. The real key is how close are we to this really disruptive, massively profitable future that you and I spent the first half hour of this conversation talking about. So Jeff Lutz actually said something a while ago, which really stuck in my head, which is like, how do you think Elon is going to be on this call? We are like, he's going to be literally weeks away from shareholder approval on like a massive comp plan that we know like he really seriously wants. So like, don't you think he's going to be on like pretty good behavior and be pitching a very bullish story? And I was like, oh yeah, like 100% he will. Like we've had depressed Elon from time to time show up on these earnings calls, but I think we get, like buttoned up, but also like very 100%. Inspiring Elon on this earnings call. And I think that dynamic matters way more than like, we lost 100 million of credit revenue and energy gross margin was 28 instead of 30%. So like, I think all this stuff doesn't really matter. The trends of where they're going, and kind of the vision for the next 12 to 36 months is what I think matters a lot more.
I agree. I think the rhetoric we're going to get from Elon is going to be the 20 trillion rhetoric. Like just throwing these like giant numbers out there and being very, giving very confident sort of like reassurance that it will happen, that they have what it takes to make it happen. That's what I fully expect too. But I do think it's going to be backed up somewhat by results too. Like the V14 performance so far has been amazing. He just had a successful Starship 11 flight yesterday. So he's had 2 back-to-back Starship flights that are finally like working the way he wanted them to. You have this, upcoming comp package that actually I think should pass without a problem, even though they're running ads on Paramount Plus, which is so cringe. And I feel like you must be trolling. Like this has to be
feels like a troll. We've been asking to advertise for years. We don't need advertising. Doesn't work.
And he goes to the most obscure like place to run ads on his own comp package, bro. It
100% feels like trolling. Like the advertising isn't worth it. We'd rather pour the money back into development of the product. Like all this stuff. I'm like, that doesn't make any sense. Like literally nobody knows about the product. Like there's all these. It's
unbelievable. It is.
Hey, for my own plan, we are going to advertise the hell out of that.
We're going to advertise it everywhere, and like literally all the places where people are not even going to care, But anyway, I agree with you. I do think that the, I think the not investment or financial advice. Like I'm not going to try to predict what happens, but I think what he says on the call will be really the things that will dictate the second, like Thursday's movements on the market. Which, by the way, is my wife and I's anniversary.
Hey,
So
happy
I will
anniversary.
definitely not be looking. So look on my behalf.
I'm sure. Yeah, you're going to be on your best behavior.
Yes,
100%
I have to
focus
be.
on them.
I have to.
How
be.
many years is this for you two?
So we celebrate the one big one we celebrate is the first day we met, October 23rd. 11 years.
Congratulations.
Yeah, 11 years. So, and you guys have been together like 39 years or something, right? You and your wife?
Yeah, we've been together for longer than we've been alive. It's,
okay, that's what it feels like.
We started having kids when we were in the womb.
Fantastic. That's some math you guys have figured out there. It is exciting though. I do think the earnings call. I think the earnings calls, starting with this one, are going to shift in tenor to be much more, like a truly like a guys, like we are an AI company. Like he's done that before, but it's like, okay, here, what I'm hoping for is like, okay, start showing us some numbers that back up your claims. Give us the break, like give us some financials around the robotaxi network in Austin. Give us some financials around the robotaxi in California. I get it that they're beta and stuff, but like give me some sort of framework to think about this so that I can go back to my model and fix it, because I feel like my model is like, I intuitively feels within 20 to 30% of where it should be.
Yeah,
but if you
sounds about right to me.
If you can confirm a 60 to 50 cent per mile with a 10-to-1 ratio, like, okay, that's all I need to know. Thank you very much. That's all I need to know.
Yeah.
This is going to be a game changer.
I don't think we'll get that yet. I think that they might share some stats on, their training or some stuff about their AI, maybe some safety statistics. But I think they're going to be hesitant to actually disclose any new financials, especially because like what you're wanting is actually like what the future is going to look like. So I don't think they'll share that on the earnings call. I think it's only a matter of time until we get that. They're going to have to disclose eventually. But if I had to guess, I'd say it's more like, Q2 of next year, maybe, that we start getting some of those disclosures.
Fair enough.
All right. Love Tesla. But there's been another company that we're watching called Bloom Energy that wanted to talk a little bit about, because they've had some pretty phenomenal news. We first did a video for this company about a year and a half ago. Stock was around like $12, $13. It's at 108 or something like that, I think, right now. So like this company has just exploded. And really what they do is they provide the power for all these data centers. So like everyone has heard about all these data centers being built. Now we're trying to get gigawatt scale, and everybody's, in that race. But they're finding is they're going from, hundreds of megawatts to gigawatt, and then tens of gigawatts of scale. The utilities just like cannot meet this demand. The permitting is taking too long. And so this company, Bloom Energy, they make fuel cells that can be sited on site. A lot of us Tesla investors hear fuel cells and we get like flashback to Nikola Trevor and all that. Oh gosh, yeah. But these are actually like stationary fuel cells. The technology is proven. Happy to go into all the details, but what I found so interesting, this is a company that's been deploying maybe 300, 350 megawatts, maybe 500 megawatts at most annually of these fuel cells. And they're getting orders for potentially 900 megawatts from a project in Wyoming.
Just one project?
One project. It's like a 1.8 gigawatt data center. And they'd have these fuel cells doing 900 megawatts of that. So like base load for half the load profile. And then they're going to have a mixture of other stuff to kind of meet the other half of the demand.
So a 20x on total revenues from one customer.
No, not quite a 20x. Maybe I said that a little.
What was it?
So maybe let's call it, just to make the math easy again, and I'll actually do it this time. 300 megawatts of annual like deployments historically.
I thought you said 30. I'm sorry. Got it.
No.
Got it. So 3x.
But like so in their total company history, going back 20 years, they've deployed about 1.5 gigawatts of these fuel cells. So on one order, they've got 900 megawatts.
Wow.
There was another order that was disclosed for up to $5 billion. This was with a really well-known infrastructure development company called Brookfield. That translates roughly to about 3 gigawatts, which is insane.
Wow.
So, like this company in particular, like they're on a rocket ship. I think people are kind of realizing that they're like one of the only companies that actually has capacity to meet this growing demand. But just in general, I know you're not as familiar with them in the specifics.
Yeah.
Like, how are you thinking as a kind of layman on this topic of like, we clearly have this big AI, all this data center growth. We know energy is a bottleneck.
Yeah.
How are you kind of thinking through that problem, and like, what are the options that are going to be available?
I mean, from my perspective, I think this is like the perfect example of how the market's going to solve it. Like, I think as long as the regulations are open enough so that a free market can emerge, then it's going to be a competition of all the different solutions to see which one makes the most sense long term. I think that from my perspective, any energy source, anything that can power something is going to be at high demand for the next 5 to 10 years at least. As long as the value proposition from AI is as obvious as it is today. And I think it's only going to become more and more obvious to more and more people the more we go into inference. Like you were talking about it before the call, you said inference is going to be such a huge deal because, when people are hitting these giant world models over time that are going to be generating on-demand video of the show they want to watch that they've created by themselves, that's going to require a lot of power long term.
Massive amount. That's a massive amount of tokens, massive amount of power. Yeah.
So let me ask you this though. So with the advent of, say, once nuclear, solar, all these like other like big boys start to really get to scale and get big enough, how does a company like Bloom, like what's their competitive advantage or the uniqueness that they can offer long term that would help their businesses be viable long term? Or is this more of a, like, in the next 3 to 5 years they're going to do great, but then they're going to be at risk of being displaced by a superior technology?
Well, so that's a great question, and to be honest, it sort of depends. So, like, the big knock on them right now is that the life cycle of their product is not very high. So it's a very high capital cost, and it's extremely efficient, which is how they kind of make up for the high capital cost. But then it's also like a short useful life, so maybe 5 to 10 years, and it kind of depends on how much you want to overbuild them and the specifics of your project. But these degrade much more quickly than other kind of power generation assets. That said, when you do the math of like all the, if you look at the total cost, like the levelized cost of energy, so basically all the costs of the capital costs, the operations costs, the fuel costs, the maintenance, everything, and you divide that by the lifetime, megawatt hours that it's going to generate, it's actually like cheaper than utility provided power in like California and the East Coast.
Wow.
Or at least like roughly on par with it. But they're stripping out double digits of cost every single year. So as I'm thinking about it, it's like, okay, well, they're not super price competitive right now. They're like, okay, but you're not buying it right now for price. You're buying it because of the time to power. So you could get a project up and running. This was an Oracle deal that was announced recently. From announcement to actually being in the ground, Bloom guaranteed to do it in 90 days, which is just like unheard of.
Wow.
Like to power a data center that quickly. So that's one of their huge advantages, is that they can move fast. There's less pollution, so like your air permitting gets a lot easier. It's like extremely proven technology. It's like you can get 5 nines of reliability. So there's all these like it can load follow, which is really important for data centers. Where you're ramping up and down demand on a very regular basis. So they tick a lot of those boxes that you just need operationally to even consider running a data center on this. So in my mind, they're like reasonably price competitive today. But where I get excited about them in the longer term is, okay, well, let's just say they get through this 5-year period where like you literally can't buy a GE gas turbine right now. Then on the back end of that, how much cost have they stripped out due to Wright's law and these manufacturing improvements? And they're going from 1.5 gigawatts cumulatively deployed in their 20-year history to doing 2 gigawatts annually, and then ramping from there. Like that's the kind of trajectory they're on, and it seems very likely to me, after I've toured their plant twice now and spoken to their management team many times, like they're going to continue very aggressively cutting cost, trying to improve the longevity of their fuel cells, like all this kind of stuff. So like I think where they're going to go is in 5 years time after this, maybe I'm actually still bullish on data center build out beyond 5 years, but let's just say like things calm down a little bit and there's more supply from alternative suppliers. Like what happens if they're 20% cheaper than utility provided power in a large swaths of the United States? Like
Yeah.
That's a massive market. I mean, that's terawatts of TAM that they can be going after.
So I'm looking at their chart. So they went from about what was a 30 some odd dollar price. What was it at? 24, and it's now rocketing. So like in the last week or so. No, it's been more than that. Sorry, excuse me. It's been like 3 months. So it's at 114, market cap of 26 billion, 27 billion. How does that compare to other like energy providers that would be in that space as well? So I don't know what a good comparison would be.
Like GE Vernova is probably the most comparable company. If you think of like a company at a decently large scale, so they make like the big gas turbines that are used for a lot of these plants, but they also do like wind power. So they're an equipment manufacturer, but then a big piece of their business is also service. So that's actually pretty analogous to Bloom's model. They've got $175 billion market cap. So, there's, I think, a lot of room for Bloom to kind of grow to that type of scale. And I wish I knew offhand kind of their the number of gigawatts that they're doing annually. But like they're basically sold out of their turbines until 2030. So,
wow.
Yeah, that's.
Yeah.
I think all boats are rising in this environment. Like, I don't think it's going to be the case that like, people are only using Bloom fuel cells to, run these data centers. But I think it's just necessity is the mother of invention. And if you need power quickly and you need lots of power from lots of sources, utilities are already saying they can't meet all this demand. So they'll be able to meet some of the demand. GE is going to be able to meet some of the demand. Elon's going to meet some of the demand by literally like importing power plants from overseas, but that's not a scalable solution.
Yeah.
So I'm bullish on electricity generation in general because I think we're going to need a lot of demand.
How do you think about the math of if you start really leveraging storage? If you start getting really smart about utilizing storage, that you could open up the capacity in the grid by potentially double. I think Jesse's analysis on X, Jesse Pelton, I think his last name is.
Yep.
His analysis is like, if you do this right, you can essentially double the grid capacity by smartly using battery storage. Doesn't this fundamentally hurt companies like Bloom? Because then their market basically shrinks in half.
So in the long term, maybe, but a couple things with that. One, like the capacity of batteries relative to the capacity of the overall grid is so small that even if we're doubling battery production like for the next 5-10 years, you're still going to be making just like a tiny dent in the overall amount of like existing grid assets that you can bring online. Wow. Secondly, the way that the grid works, it's like an auction. So if you get more batteries to better utilize your existing generating assets, that also implies that you're starting to bring on more costly generation to your like overall mix of power generating assets, like more peakers, that sort of thing. So like your generation cost on average is going to increase. And then on top of that, you still have to pay for the transmission and distribution to get it to where you need to go. So I think like the trend that I think I'm personally like very bullish on is more like distributed behind the meter assets. Cause like, it's just the grid, like the transmission and distribution, that's about 2/3 of the overall delivered cost of power these days. So you can kind of, like cover a lot of sins, so to speak, by just citing your generation on site. So even if you have to pay a lot more in capital and like there's some more engineering that goes into it, and like you probably don't want to be running a power plant, admittedly, like when your real job is just to run a data center, but like they're sort of out of luck. Like if you're needing gigawatts of power generation, like you just like getting it on site, I think is going to be the quickest, fastest, most reliable way to do that.
Yeah, it does seem like energy generation is going to be a booming market for a long time, and the technologies that can provide the best cost per watt or whatever metric you want to use to measure that are going to benefit the most in this. And as long as you are cheaper than the grid, you're going to win massively. And I think the overall, like what the most fascinating thing with this AI thing is like, what's stopping a lot of these data centers of becoming their own utility long term? if they're going to be hogging up so much distributed, like if they're going to be hogging up so many off the grid solutions, like behind the meter things to power their compute, and then over time as compute gets more efficient and as they get more and more generation, at some point they're going to run into surplus energy. When they run into surplus energy, they're going to want to monetize that. They're not going to want to just sit on it, right? Because unless compute demands get so large, it's going to level out at some point. It's tough to tell when exactly. It's not going to be anytime soon. It's going to be in the next 5 to 10 years on a minimum. So I don't know, man. I agree with you. It's one of those things that I have to do a little bit more research on for sure, to like really understand the individual stories. But this Bloom thing, as long as it makes sense from a cost perspective and they have capacity to meet the demand, then why wouldn't it be successful long term? It just becomes a question of, okay, what is your upper limit? What is the maximum number of businesses you can partner with to actually deliver your product? Like, what is the long term demand? And as long as AI exists, it feels like it's going to be very, 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 very big.
Yeah, I'm like seeing all sorts of anecdotal stuff in my like normal life too. Like my wife took my son to a doctor's appointment, and they're now using like an AI assistant to help them like take notes and stuff. We're awesome. Using that in our business, and so like I just really feels like we're in like the first pitch of the first inning of what AI is going to do. Like we're in this world where like, chat bots and like meeting transcribers are like how normal people are using AI right now. And to me, it just seems like the internet, when it was like AOL keywords, was like how people 100%. Use the internet. Like we're so early in this, and there's going to be so much demand, like the video thing, the inference demand is just going to be massive. So I think there's going to be a lot of investment opportunities. Energy is just one of them, but I just love trying to think through what are these different opportunities out here. And what a wild ride we're in for.
It's so crazy. We're in the MS-DOS era of artificial intelligence.
It's so true.
Yeah.
It's so true.
Yeah. It's insane. Wow. Crazy. Super exciting.
Super exciting. Well, Farzad, thanks so much for pinch hitting this week.
I'll pitch too if you need me to.
Clearly such a huge baseball fan, as you can tell. You're a pitch hitter, right?
Yes. Of course, man. It's my pleasure. I love what you guys do. I'm more than honored to bring y'all's content to my audience as well. I think it's just it just makes a lot of sense to have you and Bradford show and talk about the things that you research. That's also going to be on my channel, because it's just, I think my audience is going to be naturally interested in what you guys have to talk about. So, and of course it brings you guys more exposure. So where can people find your stuff if they're interested?
So you can check us out at rebellionaire.com if you're interested in learning a little bit more about what we do. You can follow me on X at Matt Chasm. Matt is a disaster. Follow Bradford at Brad S. Ferguson on X. So we put a lot of our thoughts out there, and just privileged to be such a part of such an amazing Tesla community. So appreciate our partnership with you, Farzad, and looking forward to a lot of good years ahead.
Likewise. Super, super excited. Thank you, everybody.
Thanks. Bye for now.
Bye.